Good morning, everyone. Well, a surprisingly weak U.S. service sector PMI caused further mean reversion in U.S. asset markets yesterday and weakened the dollar somewhat, but it still managed to gain against several of its G10 counterparts. The fall in the December non-manufacturing ISM index was largely due to a deterioration in new orders, but since that includes many weather-sensitive sectors such as construction and agriculture, it may be due more to the weather than to the economy. Nonetheless, U.S. bond yields fell, implied interest rates on the longer-term Fed funds futures fell, and the stock market fell for the third consecutive day. This just continues the mean reversion that we've been seeing in U.S. asset markets so far in 2014. The dollar lost some support as U.S. rates eased, yet it still managed to open this morning stronger compared with Monday morning's levels against the Canadian dollar, Aussie dollar, Japan, and the yen, and the Noki. Although it was weaker against the euro, sterling, stocky, and the New Zealand dollar. I'd like to look at the performance of dollar-yen. It's quite impressive, again, against the background of another down day for Japanese stocks. Usually when Japanese stocks go down, dollar-yen goes down as well. Similarly, the recovery of sterling after yesterday's announcement that its service sector PMI fell in December for the second consecutive month is also impressive and underlines the continued demand for that currency. A long position in sterling yen might be a way of capitalizing on these two trends. For today, the main indicator during the European day will be the Eurozone CPI for December. Both the headline and the preliminary core figures are expected to slow. The slowdown in inflation could be a concern for the ECB, but I don't expect it to be enough of a concern to cause any change in policy at this week's meeting. There are two Fed speakers scheduled during the day, Boston Fed President Rosengren and San Francisco Fed President Williams. In addition to the economic news, investors might want to watch the U.S. weather. The U.S. is suffering from one of the coldest periods in the last 20 years. Almost half of all homes use natural gas for heating, and natural gas is also used for power generation. So natural gas prices have been rising sharply. Also, wheat prices are rising as the cold damages Great Plains winter wheat that isn't yet covered by a layer of snow to insulate the plants. The cold is continuing throughout much of the U.S. The question is whether there's further to go in the trade, especially with natural gas, or if conditions are now fully priced in. Partially, that's up to the weather, a subject I claim no special insight into. Nonetheless, I can say that the technical outlook for natural gas still seems to be bullish. You can read about that in my full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.